All right, guys, welcome back. I want to show you guys an A1 setup here. This system, you can use it all the time. I'm gonna actually go ahead and take a buy. I'm gonna take a long position. I'm gonna break down to you why I'm taking a long position. So right here at the bottom, this right here, that's an order block that's resting right here at the lows. Just up a little bit. The market came, tapped the order block, and it's pushing up. And the second reason for entering into this trade right here from, let me zoom it in. Let me zoom it in so you guys can really see what it is that I'm looking at. So right here, this is a big imbalance that's in the market right here. So I'm going to draw it out. This is called a FVG. So FVG is right here, guys. I'm going to show you guys the full breakdown of how to use free value gaps in the market, capitalizing off the free value gaps to be very profitable in the market. So I'm going to put this right here. This is called a FVG. I'm going to also label this one as well. This is a order block. And what are order blocks? Order blocks are price points in the market where institutional traders put in a lot of sell orders or a lot of buy orders. And we can see liquidity was right here. So liquidity was resting at these lows here. Liquidity got swept. I love to use the dollar signs for liquidity. Dollar signs for liquidity. Liquidity was swept. The market came down and fill out this free value gap, tapped the order block, and it's pushing up. As you can see, I hopped on the chart and I saw this move was gonna skyrocket all the way up to the top here. And as you can see, I'm up $300 already on this trade. And I took a long position. I literally hopped on the trade the moment I started recording, just to capture this so you guys can see it. So I took a long here, and I really wanted to get in the long right at my order block, but I didn't want to miss the trade, so I had to hop in as quick as possible. And then I'm looking to take profits right up top here, and I can leave my stop loss right in the center of my order block. Also, this is a 4-to-1 risk to reward ratio. So if I risk $100, I'm risking $100 to make $400. If I risk $1,000, I'm risking $1,000 to make $4,000. A 1-to-4 risk to reward ratio. You can already see that I'm up $470, $500, and market is pushing. Also, just to show you guys on my account, so the prop firm that I'm trading with right now is Take Profit Trader, as you can see. So this is their challenge that I'm taking right now just to pass it. I already made $424, and right now I'm up 800 and some change on the account, the overall balance on it, just so you guys can see. So right here, this is a strong psychological level here. So what I'm gonna actually do, I'm gonna see how price is reacting, and I'm gonna look to get out right up here, and I'll move my stops up just a little bit more, and I'm going to be looking to take profits right up top here. So once we get up to the top here, strong psychological levels all across the board, right in this area here. So I'm going to look to get out the trade right around here. But this is how you use liquidity and the free value gap and the order block. So the orders was resting right here at the lows, but first they had to come down and take out liquidity here. Liquidity is always resting at the highs of the market and the lows. So right here, liquidity was resting here, liquidity was resting here, liquidity was resting here. So they swept liquidity all the way down, coming down, sweeping liquidity all the way down here. And they had to fill out this order block. Let me show you guys the order block right here again. So you can see there's a strong impulsive candle that pushed all the way up here. It created a so that had to be a change of character, and then the break of structure is up here. So let me draw it out so you guys can really see on this. This was a quick trade that I had to just hop on here and take so you guys can see what it's like when it comes to smart money concepts. So break of structure, and then right here was where we had the change of character that happened here. And change of character I'll always label that CHOCH, which stands for change of character. So I'm going to break down to you guys again why I got into this trade. As you can see, as soon as the recording came on, I hopped on and clicked a buy. The reason why, because I understand the technical analysis and how to read the candlesticks. So as soon as I hopped on the computer, I saw that this was going to be a killer trade. So I had to jump in the trade as quick as possible. So I'm going to take 2 to 3 minutes just to break it down for you right now. Again, the second take on it on the breakdown. So here we had a change of character that pushed the market up. So it was a downtrending market right here on the 1 minute time frame. And also this is futures trading. So I go off the 1 minute time frame, right? So right here, change of character here, which means that it's going to change from a downtrend to an uptrend. Had a little slight small consolidation there before the change of character. And then here was the break of structure. So the break of structure was the confirmation that the market is going to continue in an uptrend, right? So the market was continuing in an uptrend. But here on the change of character, this is what happened. So on the change of character, there was a strong impulsive move. Strong volumes came in to drive market price up where buyers were in control right around this price area. But that caused something to happen. It created a imbalance in the market here, which is called the FVG. So a FVG, it's simply a imbalance in the market where there is a gap. So you mark out the first candle at the bottom. It will always be the first candle at the bottom. The big candle will always be the second candle, which is the gap. And then the third candle is the top of the wick. So you want to mark out the bottom of the wick on the third candle. And you want to mark out the top of the wick on the first candle when it's a uptrending motion, right? So remember the top of the wick on the first candle. So from the top of the wick all the way to the third candle's bottom wick, you mark out that gap that's in the market, which is this big gap here. And the market always has to come back down and fill out the gap. So look, right around here, the market failed to come back down. It tried to come down here, but that was a fake out to push to the upside. That was a manipulation move to push to the upside, right? So the market still didn't come down to fill out this gap. Over here, the market started downtrending and liquidity, it's always resting at the lows. So as an example, what I mean by that, I'm going to use my brush tool here. So right here at the lows, liquidity is resting at the lows and the highs of the market. Liquidity is always resting at the lows and the highs of the market. The lows and the highs of the market. Everywhere you see a lower high or a lower low or any lows in the market at all, liquidity is always resting in those areas, right? So you see all the liquidity zones here. When the market was coming out for all the bottom liquidity that's resting there, the market was simply collecting all the money that's resting here. It's collecting all the money that's resting there. And it pushed all the way down, fill the free value gap, touch the order block. Once your free value gap is filled, sometimes the market can it can start moving your direction 50% of the free value gap. So the market actually came down, tapped into the order block. You can see that happened right over here. It tapped the order block. And order blocks, that's where orders are resting for sells or buys in the market by institutional traders. So because of knowing that, I was able to capitalize off that system that I know. And this system right here that you're seeing, this strategy, it is a smart money concept. And I use this smart money concept to trade in the New York session. And I'm going to start live trading as well, so you guys can be able to take the same positions as me. So as you're watching this video, just be patient and take your time to understand free value gaps, order blocks, liquidity zones, and break of structure and change of character, so that when you start live trading with me and you're seeing my setups, you're seeing exactly what I'm looking for the market to do, you will also understand the story that the market is telling us. Think of the candlesticks as a story. And once you know how to read the story, then you know exactly what's going to happen in the market. And then you'll be able to scale in and to take trades with me as well. As you can see, I'm up right now $520, and I'm going to be looking to get out pretty soon. So actually, I'm going to go ahead and close the trade once I hit $1,000. And the reason for that is, so this prop firm that I'm trading right now, they have a consistency rule of 50%. And let me just pull that up for you guys so you guys can see exactly what it is that I'm talking about real quick. So I'm gonna go ahead and I'm gonna log in right here, and I'm gonna pull up all my credentials for you guys to be able to see the consistency rule when it comes to trading in the market. And one thing before I actually show you guys the consistency rule, I want you guys to understand that when you have a system and you're trading in the market, it's harder for you to lose in the markets than just hopping on the chart and then you're gambling because you don't know what to do. So again, let me sign in the account right here, and let me make sure that my Bluetooth is on just so it can pair with my phone. Take Profit Trader. It's an amazing institution, guys. I recommend that you go ahead and get yourself a 50K account. That's the account size that I have. And today I'm just looking to make $1,000. As you can see right now, I'm actually loading up on my phone just to log in my ID and all that stuff. There we go. So we're logged in. And at this point, I'm not even worried about the trade. The reason why I'm not worried about the trade, it's because I know the setup that I have is amazing. It's a master setup. So it's my first day trading on it today, and you can see the profit target is $3,000, and you can't make more than 50% of your profit target, which is 1,500. And let's go back on the charts right now so you guys can see. I wasn't worried about the trade because I knew it was moving in my direction. And let me pull this down just so you guys can see. Guys, this is an A1 setup, and once you understand how to use this system that I just showed you, you look for a free value gap, which is an imbalance in the market, and you wait for the market to come and to tap into the institutional orders that's resting in the order block, and just make sure liquidity is swept and there was a clear break of structure and change of character that's letting you know the direction the market is moving in. And this is a clear setup. You can see I'm up $600 off this trade, and I'm going to close this trade out again because I just want to hit $1,000 in total profits on this account here. So let me just make sure that I can see the account. So one of my accounts, you can see I'm up 1,200 on that. And this account right now, I'm looking to close out the trade once we hit $1,000 on that. So I just got a couple more dollars, and then once we hit that price, I'm going to go ahead and close my position on this trade, guys. But guys, this was an A1 setup, and make sure that you continue to watch my videos. And as you continue to watch my videos, I'm going to give you guys more A1 setup and more breakdowns to come. So make sure that you stay tuned to everything that I'm going to be dropping for you guys in this, guys. This was an A1 setup. Perfect. This is how you use it. And also this system, this is called a smart money concept. This is smart money concept that's broken down right here. And as you can see, the time 2:42, and I'm trading NASDAQ over here. This is a futures contract in the New York session, and we're looking so good. We're looking so good right now, guys. As I told you, there was a strong psychological level right up top here, which can push the market down. That's why I was looking to say, you know what, I'm going to get out the trade once we get around to this area here. So we just hit $1,000 right there. You can see it. So what I'm going to do now, I'm going to go ahead and close this trade out for $1,069. So 1,000, nice, $1,072. And I just executed this live trade here for you guys to see it. This was an amazing take, guys. Amazing take.